Imagine being told you could purchase a piece of Soho back when New York was a farmland. You see this as a massive opportunity, but your seller doesn't. Someday, this land won't be on the market, so you buy the whole thing and be set for life. What if this was the same? Virtual real estate holds the same promises as physical, but with a modern twist. The audience was niche now, but eventually, every business would be clamoring for a piece. It was the promise of wealth for real estate without having to fuss with the housing market. Suddenly, it was everywhere, through various platforms on Zuck's Metaverse, and it seemed only to be growing in popularity. Tech enthusiasts were going feral at the idea of buying in before anyone else. It was like they were handed the opportunity to invest in Apple or Microsoft before things got big. And then, it all seemed to disappear. No more buzzing, no new news articles, and the information that did come out was not looking good. The fire of virtual real estate went out as if it had never been burning in the first place. But what if I told you there was one critical detail everyone overlooked that made it virtually non-existent? For a while, everything seemed to have a virtual counterpart. Virtual money, virtual events, and virtual marketing. Things had unmistakably shifted into a remote, online landscape, and there seemed to be no end in sight. What about real estate? Could you own a plot of land in a virtual landscape that you could call your own? This is where the Metaverse set its sights. An online platform to connect to and play games, release products, offer services, and host events. Businesses and individuals would go in and purchase these virtual properties. Like any other piece of real estate, they could be bought, sold, purchased, and leased. The Metaverse was said to be a digital platform where virtual and augmented reality would connect the virtual and actual worlds. There were many platforms you could buy into, giving you the feeling of choosing what you wanted to buy based on information you could glean on the individual spaces. If we go through it, there were seemingly endless numbers of platforms: Hyperverse, The Sandbox, Decentraland, and more. Land in each Metaverse platform would be limited to a set number of lots, so if you didn't get one of those, you'd be out of luck. This scarcity drove investors in a fear of missing out, of being the only person not to buy in early and miss out on that early adoption boom. But what was it that hooked everyone and made them buy into this? What's the hype all about? It was the blockchain and non-fungible tokens, or NFTs. They are set to revolutionize ownership in virtual real estate. Blockchain would ensure transparent and immutable property records, while NFTs represent unique virtual assets that could be bought, sold, and traded. This tech combination offers solid proof of ownership. For many, these promises made virtual real estate investments seem like a financial bonanza. Then, it was a perfect storm alongside other cards in play, most notably land speculation. Like the real-life physical real estate market, land speculation gripped potential and early investors. Being in on the ground floor would secure prime virtual real estate properties at rock-bottom prices, and many saw immediate skyrocketing in valuation. Many people began to recognize the profit potential, so they joined in, banking off a slightly higher investment and believing it would only go up in price. In 2021, the combined sales of 4 significant platforms reached roughly $501 million. These virtual land investments were selling for as much as a physical house. But on August 7th of the following year, the unexpected happened. From $37,000, it dropped to $14,000, a 61% drop in less than a year. It became unpredictable and a massive risk with no guaranteed boon. Seasoned investors wouldn't touch the thing, and newbie investors felt intimidated. Influencers in the crypto space stopped suggesting it as the next big thing and started advising that you should only invest as much as you're prepared to lose. Without the guarantee of a big payout, what was the pull? prices today and a year ago are two very different figures. The reasoning for this is simple and nuanced, and it's tied to the fact that all of this metaverse real estate isn't the same as the physical house. People rushed in to purchase the land and never developed anything. They were sitting back and waiting for the metaverse to take off so they could sell the land for a massive profit. From the outside, it's a terrible investment everyone's sitting on, waiting for the sales to come. But ordinary people already can't afford their highly priced tickets, and the ones who can afford them know it's a waste of money. The frenzy over virtual land boils down to a mix of speculation, but one issue could have been manageable. The risk for metaverse real estate is unavoidable because you do not control it. If a metaverse platform folds, your investment disappears. Unlike physical real estate, you no longer can fall back on a piece of land you can touch or stand on. Metaverse properties only exist within their created world, and if that goes under, so does your land. Nothing protects you from a symbolic plug pull. While mainly unrelated to virtual real estate, other factors come into the scene. Many people still believe in the importance of decentralized currencies like Bitcoin, but the fall of FTX does play an essential part in many bubbles in the virtual and crypto space popping all at once. The public perception of crypto and virtual worlds took a hit with the sudden bankruptcy of FTX, and the undeniable spotlight it put on their projects looking to make a quick buck off a consumer interest. Risky investments aren't in fashion. NFTs lost their air of excitement and became a cash grab, and fewer people are looking to tech influencers to help them catch the wave of the next Dogecoin-type investment. There's less and less interest from the general public, meaning the already niche and limited audience grows thinner with time. With necessities being too expensive, the rising cost of living, inflation, and stagnant wages, this speculative investing is, in many ways, spending money to plant trees you may never see. The truth is, the metaverse isn't and won't be for everyone. Virtual real estate was most exciting when people believed they were genuinely getting something valuable for their money. To truly make money, virtual land investors would need to satisfy a need with their properties. Without potential buyers, there's nothing to sell, and you're left with a plot of land you can't turn around. The future might be unclear for virtual real estate, and its issues seem like a lot. But a lot can change in the next few years. Many corporations have been at this crossroads before, weighing the odds and making decisions that could either lead to a historic jackpot or a cautionary tale. Take Apple's Batterygate, a saga of power, perception, and the price of progress. Just when you think you got all the answers, the questions change. Click the thumbnail on the screen to discover more about it, and I'll see you there in a moment.